Ladies and gentlemen, the Chinese property market continues to free fall. And this is quite serious because not only it affects the property market, the wealth of the Chinese, but it also affects the consumption pattern of Chinese. And more importantly, there is a lot of learning lessons for Singapore and Malaysian property investors, and also for economists and property watchers, and more importantly, for policymakers. Now, what are these lessons? I'll share with you at the end of the video, but let's take a look at what exactly is happening to China right now. And by the way, I am in China right now for a business trip. So I think it's important for me to give you the sentiment on the ground as well. So the Chinese property market collapse has been going on for many years, and it has been around for 5 years, and there's a lot of wealth being wiped out. But more importantly, there's a lot of lessons behind this episode. And more importantly, I will call this the price of letting a bubble run. And there's a lot of things that we should learn in Singapore and in Malaysia, especially Johor. So I think the backdrop of this is the property market in China has continued to run, and then it exploded. And right now, it is very clear that China will face a lost decade or even decades. We've seen this in Japan, and now we're seeing it in China. And I think hopefully this will happen to Singapore and Malaysia if they were to take the lesson from this episode. So the news was just released last quarter. The Chinese housing market continued to fall significantly. And nowadays, nobody buys, rather very few buyers, because everybody is waiting for a cheaper price. And the sellers have reached a stage where they give up hope of waiting. So this is very serious because we have been waiting for this recovery for a long time, but it's not recovering. And it has got a lot of spillover effect on the Chinese stock market. And I've always warned people not to touch the Chinese stock market. And right now, I think this is coming to pass. And I think this will continue as well. So in the latest June report, 88 out of the 100 cities in China is still recording a month-on-month price decline. And this is the 35 months of year-on-year drops in the price decline. So this is a free-falling scenario. And once you reach this stage, nobody's going to buy the property because it has there's a lot of pessimism, and everybody believes that this is going to fall further. So if you know that it's going to fall further, why would you buy, right? So how much of it has actually fallen? The prices right now are below 2010 level. So they have 17 consecutive quarters of price decline, and they have wiped out 15 years of property price appreciation. And a lot of middle class people are being hurt. So prices right now has fallen by 40 to 50% from the peak. Imagine your house price fell by 40 to 50%, and how would you feel? And the new sales right now has also declined. At the peak was 1.8 billion meters square in 2021. Now we are left with below 1 billion square meters as at last year. And the real inflation adjusted price index right now has fallen below 2021. So in short, the entire property market has collapsed, and it's collapsed for quite long. So the property investment has collapsed 50 to 80% from the peak, according to capital economics. Now, this is important because property was the savings account of almost all Chinese. At that point in time, they don't really have much in savings because everything was plowed into a growing asset. And stock market was not so popular compared to property because I think there's some fanaticism, Asian, especially Chinese, on property. So as a result, we're now looking at $18 trillion of wealth being destroyed. And property has always accounted for roughly about 70% of a household wealth and asset. So if 70%, which is majority of your savings, are being hit and wiped out by 40, 50%, it will feel terrible, right? So right now, this is a very bad situation. And in Singapore, we used to have this. I think we are more well spread out. I think in Malaysia, this fanatism with property is still there as well. So I think this is something we really need to watch out for. Now, this has a lot of spillover effect because as your wealth fall by 40 to 50%, everybody will pull back on their spending. So in 2010 or so, the retail growth in China used to be about 10% a year. Right now, we are looking at 2% growth a year. So it's dropped by almost 8%. And China has 10 quarters of deflation right now, which is near zero or actually price decline. And a lot of people say, but falling prices is good.
Dear passengers,
Falling prices is a
prepare your
phenomenon
belongings for
of
departure.
a result
When
of
the
falling
light
demand.
finds the gap between the
And
train
as a result, this is a
platform,
really bad thing.
we will
And
arrive
youth
at
unemployment
Miles
is a high
Gap
of 17% or so, and actual numbers may even be higher than this. So as a result, what we're saying is whenever wealth falls, the spending will fall and has spillover effect the rest of the economy. This is where the infamous involution is now happening. And I've talked about it quite a few times. In Chinese, it's called nature. So involution is a race to the bottom. Everybody competes with each other. Now that I'm here, I see more of it compared even to last month. That even roadside stores are competing with each other for cheaper drinks, cheaper desserts, food, and things like that. Of course, we've seen this in the EV car makers. Right now, we have got a few hundred EV car makers now reduce and expect to cut down. And there's no end to this. So all these are sparked off by the property bubble. Now, what is worse is that in China right now, there's a hell of unsold inventory in the property sector. So we have got roughly about 7.8 million square meters. There's a hell of property that's being unsold. And by the way, this situation is also quite similar to what we're seeing in Malaysia. And this is quite a serious thing. So in short, the root cause is that when your property prices run ahead of fundamentals, this is going to be an issue. So now looking forward, the demographics of China will change. They have a shrinking population and there's oversupply everywhere. There's speculation. The speculative bubble has burst, and therefore people no longer view housing as a good asset. Now, in China, everybody used to 炒楼. That means they used to fry the property. But it simply means that they speculated heavily on property. And by the way, fortunately, Singapore and Malaysia, I think we see less of that. In the past, we did see some of that, but now the music has stopped for China and definitely stopped also for Singapore. So the core lesson is never let the property sector and property prices outrun the economy. Property prices must grow with economic fundamentals and not ahead of them. And once you detect a out of control property sector, you must rein it down. Impose ABSD, impose heavy taxes, cut down on lending, cut down on ability to borrow money. On the supply side, you must quickly release more land, build more houses and things like that. So that's exactly what the Singapore government did. And unfortunately, the Chinese government did it too late. As a result, it burst the bubble and it never recovered. So in Singapore, property prices went out of control during the COVID period. So during COVID period in 2021, it went up to 10% rise, then it fell. Now in private property sector, it's about 3.3% last year, and I think this year will even be lesser. And HDB has just went negative. So it is cooling, not a bubble bursting. So these are the kind of things that the Singapore government has done. They tightened lending. They also increased ABSD for second property and also for foreigners, and that really helped quite a lot in reining. But in my opinion, it's still too little during 2021. Had it been tightened even more, I think
the doors are about to close.
By the way, in JB, the same thing is happening. JB right now, because of the RTS link and the JB Singapore Special Economic Zone, is lifting up the entire economy, especially on JB condos and service apartments. I think landed property has gone up as well. So right now prices are escalating very fast, seeing 20 to 30 over percent rise. And a lot of the Johorians are crying murder that the prices of property has went out of reach. Of course, the blame comes to Singapore, and also the Johorians themselves were speculating up the property as well. So we're seeing this initial phase of a bubble, but frankly speaking, in JB, there is a serious oversupply situation as well. If you were to see the amount of condos that are coming up and they are largely empty, the whole building you at night when you see, I think it's less than one quarter that's lighted up. So it's a very clear case of oversupply. So in short, if you take a look at all three countries, number one, China has suffered half a lost decade. So 5 years has been lost, the property bubble burst, and I don't think there's any recovery for a long time to come. And prices has fallen by 40, 50%. It has spilled over the rest of the economy. Wealth has been destroyed. And for Singapore, there was quite a mad property price escalation, and it's now been finally brought down to, to fundamentals. And right now we are seeing in JB, Johor Bahru, the prices are escalating like crazy. So I hope that the Malaysian government will control it and not let the prices go out of control. Now, I'm vested interest. I do have a Malaysian property. I, of course, will be happy if the Malaysian property go up. But for the good of the country and for JB as well, I think you should not let the property bubble go out of control like what we see in China. Now, for individual investors, this is what I like to say. A house is largely a shelter first, not an investment. And your own property that you stay in is, frankly speaking, not easily realizable investment. So try not to overbet on it. And this is something that you got to be careful of. And we should never over concentrate. So a lot of Singaporeans like to concentrate all their wealth in one asset, which is property. And of course, now we also got to warn people not to over concentrate into stocks as well, because the US stocks is also a bit published. So we got to be careful. Always spread your asset all over. I think the good rule of thumb is that never let one asset contain more than 20% of your entire portfolio. Else, you might suffer a tremendous loss of wealth when one asset bubble will burst. So, in conclusion, whenever there's an asset bubble, we will always pay the price. So, for private investors like us, we got to be careful of asset bubbles. So, property bubbles are dangerous, and we see that right now in the new development in both Singapore and JB. We are also having a bubblish situation in AI stocks, and we got to be careful that we over concentrate our assets into it. So, as a rule of thumb, never have more than 20% of your wealth in one asset class. Else, something would happen, and it's always difficult to predict what can happen. We will always pay a heavy price. So, let me hear your views to this, and hopefully, I'll be able to settle down and do a live stream tonight, and I'll see you then. Bye bye.